section. All right, Trent, good job, good job. Oh, you also want me to look at the SPYs? Let me look at that, SPYs and Qs, which we normally do. All right, if you had a green day, not a good day for mama. Guys, today was one of the hardest days up until about 12 o'clock that I've seen in trading in a minute. It was all over the place. Like everybody was scratching their heads. I went into all of the top live rooms and everybody was scratching their heads except one trader. One trader went 2 for 2 today, which is interesting to me, but whatever, you know. Yeah, red like the slaughterhouse. Now look, normally if I have a red day, like it's been a while since I had a double red day. A double red day, guys, is when your investing account is red and your trading account is red. You know, you traded and it was red and your investing account is red. And I mean, I normally don't get that. Normally if my investing account is down, I try to make it back in the trading account to kind of offset a lot of the losses, especially if it's down big. That means if my investing account is down big, that means I can probably heavily short day trading, and I can offset some of those losses. But today was the opposite. I had an investing day that was down and I had a trading day that was down, so it wasn't a good day. Y'all know I hate Thursdays, but I still push through it. I still push through it until it's one day. Thursdays are gonna be my best days trading. It's just that you get this kind of BS on Thursdays. I don't know what it is about it. So Mondays are usually up days, right? Or a down day, right? More than likely, when the market is doing well, Mondays are, in my opinion, the best days to trade. Friday expirations are also kind of easy because you can kind of look at where everybody's strikes are, and you can kind of figure out where the market's going to trade that day. And also, Fridays, either the market is up or down. So Mondays and Fridays are pretty much the same. Then you got Tuesday, Wednesdays, and Thursdays. Humpback Day is actually okay, except there's nothing going on Hump Day. Hump Day is usually a very technical day. You come in and you got your technicals down. Hump days are usually great for technical trading. Then you got your Tuesdays and Thursdays. Now, y'all know for a long time, I didn't trade on Tuesdays and Thursdays. Tuesdays Tuesdays usually, now, if I had to pick a day, I'll pick Tuesday because Tuesdays is usually what Mondays should have been. So if the market should have been down on Monday and it was up, it'll probably be down on Tuesday. If you wake up on Monday and the market is down, it's probably going to be up on Tuesday. Tuesday is the opposite of Monday. Wednesday is a technical day. Friday is just either a big up day or a big down day, depending on how we feel for the week. But Thursdays be doing its own thing. That's why I hate Thursdays. I hate Thursdays. I hate it. And it's not my fault. I am trying my best to be a better Thursday trader. But I just can't figure Thursdays out. When I look at my losses, the biggest losses that I've ever had, Thursdays. One of the biggest losses I ever had was on a Thursday. Nat gas. When natural gas comes out and it tells you the nat gas report on Thursdays. One of the biggest losses I've ever experienced in my life was on that Thursday. On that Thursday where I lost 100% of my account because the market was down like 2,000 points. It was a Thursday. Thursdays and Joel and Thursdays, and then I'm a trade on Fridays. I might start using Thursdays as my golf day instead of Fridays. I'm thinking about doing that because I hate Thursdays. I can't stand it. I hate it. I can't figure it out. Or I just need to trade really, really, really small on Thursdays. I hate Thursdays. What's you guys' favorite day to trade? In the comment section, what is your favorite day to trade? What is your most favorite day? Mine is Mondays. My favorite day to trade and invest are on Mondays. My favorite day to trade is on Mondays. So I'm going to just let you guys know. Everybody know Mondays, Joel is going to trade some. Joel is trading on Monday. I don't care what's going on. Joel's going to take a trade on Monday. He going to take one. It sets up the week because even if you lose on Monday, you can get it back Tuesday, Wednesday, Thursday, or Friday. So you might as well take a shot at it on Monday. So I love Mondays. Mondays kind of lets you guys, Wesley says, whatever day I win. Oh, whatever day you win. I thought you were saying every day you win. Your favorite day is whatever day you win. That's hilarious. What is your worst day of trading? Like, what's the day that you guys hate the most? What day do you guys hate the most? I hate Thursdays. I hate it. I don't like using the word hate, but I can't stand it on Thursdays. I like throwback Thursdays though. I love throwback Thursdays. I love going back and seeing what you guys did in the past. All right, thank you. Who just sent me that? Mrs. Matthew. Good to see you. Hey guys, Mrs. Matthew, you guys need to go and follow Mrs. Matthew. All right, she is a baller here. Well, she's a big influencer here on the TikTok platform. So you guys need to go ahead and check her out. You can also check her out on the across the street. We usually go across the street and go live. You need to follow Miss Matthew over there, and you need to follow her over here. All right. What's going on? Good to see you. All right, but guys, my worst day, I can't stand Thursdays. So you guys said what? Fridays? Market close Fridays. You hate Fridays? You hate Fridays of the trade? You don't like trades over the weekend? I'm doing just fine. I'm doing good. I'm hanging in there, Mrs. Matthew. I'm hanging in there. I see a lot of people are dropping like flies, but I'm hanging in there. Trying to do my thing. You can't stand Tuesdays. Yeah, I cannot stand, oh my God, I cannot stand Thursdays. I hate Thursdays, but I'm trying to push through it, guys. I'm trying to push through this and try to trade on Thursdays. It's just that I don't know what it is about Thursdays. It's a day that just really can't make up its mind. It wants to be. Tuesdays and Thursdays are kind of like the middle children, right? If you're a middle child, I didn't become a middle child until I got older. I was always the oldest in my family until I found out I had an older brother. And when I found out I had an older brother, I became the middle kid. All right, the middle kids are always like, dang, I can't be the baby and I can't be the oldest. That's how I feel about Tuesdays and Thursdays. Okay, you love Thursdays because you get excited about Fridays. So I just can't stand it, guys. I really can't. But you got to push through it. When you're trading and you're investing, what I like to do, my dad taught me something before he passed. He tell me sometimes you win when you lose and sometimes you lose when you win, which basically means you need to really make lemonade out of lemons or lemons out of lemonade. I don't know the saying, but always look at the positive. Sometimes when you think you guys are losing, sometimes it's a moment where you can teach yourself something, right? Maybe you can look at something. Maybe you'll tighten up what you're doing. When I play golf, guys, some of my worst days that I play golf, I usually play really, really well the next day because I figure out something in my swing, and then the next day I go lights out. So sometimes you gotta use those moments to sit back and say, why am I losing right now? What am I taking from this? And I want you guys to do the same thing in the stock market. If you're trading and you're losing, what you should be doing, guys, is you should be logging in everything that you buy. So if you have your strict strategy that you go by, if you take a following trade, and maybe like a lot of us will revenge trade, some of us will lose and then we will want to make it back. So we would revenge trade, or we will trade more to try to get that money back, right? And then when you look at your stats, you'll say to yourself, why did I take that trade? Why did I over leverage myself? Why did I add more, positions to that particular trade? So you can literally wipe that out and say, that's not part of my strategy. That's not me. Now, if you're sticking to your strategy and you're doing everything right and then you're still losing, well, then that's a problem. That's when you need to change something in the way that you're approaching the market. Volatility is high now, guys. So with volatility being very, very high, you're going to see movements like we saw today. When volatility goes low, you'll start seeing those easy moves to the upside or to the downside. So I hope you guys are logging your strategies, logging your trades, looking at your winning percentages versus your losing percentages. I also want you guys to take if you enter a trade and you manage that trade and somehow you're able to get out of that trade and you still didn't lose any money, you should log that in as a win because you were able to manage it. You were able to hit the buy button. You were able to sit through it. You were waiting for it to hit a target level. It hit that target level. You brought your stop up to break even. And then somehow or another, the market just reversed and went back to your break even. You need to count those as wins, because if you can manage a trade over and over and over and over again like that, or manage an investment over and over and over again, that's what's going to get you guys to the promised land. So VWAP, anybody heard of the VWAP? Has anybody heard of the VWAP? And not WAP like Cardi B would say. We're not talking about that WAP. But has anyone heard of the VWAP? All right, you guys have heard of the VWAP? All right, so VWAP is what a lot of traders will use when they are trading. Now, you guys are going to love tomorrow, okay? Tomorrow, what I'm going to do is I'm gonna talk about all the indicators that you guys use. Pivot points, Elliott waves, TTM trend, TTM squeeze, Bollinger Bands, Ichimoku's, FW Mobo, right? Tomorrow, I'm going to go through all of those different indicators, and what I want you guys to do is we're gonna say if these indicators are great or if these indicators are trash. All right, I'm going to show you guys how to use all of them. And then after we look at it, I want you guys to pretty much rate it. Is this a great indicator or is this trash? And I'm going to give you guys my opinion too. Now, I want you guys to be 100% honest with how you feel about it, even if you know that I use it. Guys, I don't get offended. I will not get offended if you guys were like, Joel, I'm not using TTM trend, or Joel, I'm not going to use the what would Joel do method, or Joel, I'm not going to use the Ichimoku, right? There are some indicators, guys, where if you say, God, Joel, that's trash, I'm not using it, I'm not going to get offended. I'm going to laugh with you. All right. We are here to figure out our own strategies, and we're dating all of these different indicators to see which indicator meshes with our personality. All right, and that's what my job as a consultant is. My job as a consultant is not to make you trade and invest like me. Just like if you decided that you wanted to play golf, I don't want you to play golf that looks like my game. All right, I'm going to show you guys what I see through my eyes. My sons were championship swimmers. Neither of my kids swam the way that I swim. Like we have three distinctive ways that we approach water. And what we do is we all lean towards our strength. All three of my sons, including my wife, if we go to the golf course, 4 different swings. Now, I'm going to coach everybody because I'm the better golfer. But there's 4 different golf swings that's going on when we hit the golf course. All right. But I'm going to try to teach them the fundamentals and the basics so that they understand the game, just like they did when I was teaching them how to swim before they both became championship swimmers. But then they also developed their own style, and everybody is different. I want you guys to do the same thing. All right. So the VWAP. There's so many different things that day traders use to day trade, right? And my job has always been to try to make things as simple as possible. So we kind of want to make sure that our charts are as clean. We want to make sure that our charts are as clean as they can be. So the VWAP, guys, one good thing about the VWAP that I'm going to teach you guys today is I've already been teaching you guys my system, right, which is BTG, which is bias, trigger, goal, right? When you're trading, when you're investing, you always need something that's going to represent the bias. So, for example, in the comment section, what are you guys using as bias? A bias just means that when I use this indicator, it's going to let me know if the market is biased to the upside or biased to the downside. I use moving averages. So in the comment section, let me know some of the things that you guys are using to give you biases. Some of you guys are using charts, right? I use moving averages. Preferably, Learner for Life says, I use Trump's Twitter. That's hilarious. Hey, that's great, right? Because you know if he's tweeting, you know the bias is either going to be down or up depending on what he's talking about. That's hilarious. But I use moving averages, right? So the very first thing I teach you guys as beginners, as advanced traders, is I always ask them, what moving average are you using? When I hear a trader or an investor say, I don't use any moving averages, say to myself, all right, they're out there winging it, which some people are very good at winging it. All right. Remember, I sit back and I analyze first, and then I kind of want to see kind of what they're doing. More than likely, if they're not using something to give them that bias, then you're just out there creating your own bias. You're waking up and you're using your instincts as bias. Instincts are good if you've been trading the market for over 10,000 hours. Now, if you don't have over 10,000 hours, I suggest you use some type of indicator to give you that bias. So when I'm investing and trading, guys, I'm going to use a 200-day or a 200-week moving average. If we're above that average, so if you were looking at this chart right now, those candles that you see under VWAP, that's like your charts, right? Every chart, you guys are going to see me use a moving average, which is that line that's underneath it. And that's going to give me the bias of the market. So if that line is angled up, I'm going to trade to the upside. If that line is angled down, I'm going to trade to the downside. That's always going to give me my bias. All right. When I use the VWAP, because I'm going to show you guys how I use it. When I use the VWAP, guys, which is a weighted average. So I don't really want to confuse you guys, but when the VWAP is on your page, it's going to give you the average price of that stock during the day, but it's going to be weighted towards an area that everyone was buying at that particular time. So they're going to have a price that's weighted, and you're going to see it in a line on your chart. So for example, if you wake up one day and you see Apple at $100 a share, but then you see a VWAP line that's at $90. Well, that tells you that if you wake up and Apple's at 100 and the VWAP is underneath it at 90, the 90 area is the average weighted price that everyone was buying. So it's kind of telling you that we're about $10 away from the weighted average. So what people will tend to do is they'll still stay biased, but if we start to go down in price, we all know where it's going to the average, which is the VWAP. So a lot of people use the VWAP to kind of know where we're at. If we wake up and we're underneath the VWAP, it doesn't necessarily mean that you have to short. But if you wake up and the VWAP is above the price that we are right now and we start going up, a lot of people use the VWAP to figure out when they want to get out of that stock or if they want to reversal trade at the VWAP. For you Bollinger Band users, you should be using the VWAP if you're trying to reverse that Bollinger Band, because y'all know how I feel about tomorrow. Y'all already know what I'm gonna say about Bollinger Bands. Trash, 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 trickety trash, trash, trash. But if you align it with a VWAP and you hit that VWAP and you hit maybe that Bollinger Band and it starts to turn around, thank you G7 for that mustache and that hat, then you know it may work to your advantage. Now I'm gonna pull up the chart so that you guys can see it in a second, all right? But the VWAP is used in that particular manner. Now, I know some people that uses the VWAP when they're trading and investing. I personally don't do it. All right, if I was, when I use the VWAP, remember guys, I only teach you guys from my point of view. When I'm using the VWAP, I'm using it as a trading material. I'm using it to kind of give me an idea of where things are. I will allow you guys to add the VWAP to your charts so that you can have one thing that's on there that's kind of telling you where everything is. And this morning, if you were trading, all we were doing this morning was going to the VWAP, reversing, to the VWAP, reversing, to the VWAP and reversing if you were looking at the NASDAQ. So let's go and see what ChatGPT was saying about the VWAP. All right, let me pull some pictures for you guys. And if you guys don't know this, at 8 o'clock, I start going live now. I trade live for my traders that are in here because the futures market will close from 5 to 6. It reopens at 6 o'clock. We're going to start trading live at 8 o'clock so that you guys can see how it feels to trade in real time. All right. Now, the market doesn't move as much as it does at 9:30, but you do get a nice little move. Nice little 50-point, 100-point move on the NASDAQ will give you about, $100 to $200 a contract. All right. So let me pull up these pictures real quick. Let me pull up these pictures. And again, if you heard of the VWAP, put it in the comment section. Say, I've heard of the VWAP. If you heard of it, I don't know. I always have a hard time saying what you should put. Say, if you heard of the VWAP. If you use the VWAP, all right, which is interesting that you guys have you guys heard of point of control, POC? Have you guys heard of point of control? How about, you guys have heard of point of control, POC? Have you guys heard of pivot points? Look, we're going to talk about all of them tomorrow. All right, so ChatGPT says, and I always do this, I always ask it to explain it to me as if I was a fifth grader. All right, so if you look up here, the VWAP explained super simple, like you're 5 years old. What is the VWAP? VWAP is equal to the volume weighted average price, VWAP. Think of it like this. Imagine you're buying candy all day. Sometimes you buy one piece. Sometimes you buy 10 pieces. Now, should each purchase count the same? No. The candles matter more than the candy. All right? I don't know if that was a good example, but that was a terrible example, ChatGPT, but some of you guys may have gotten it. But it's the volume weighted average price. All right. So just because price is out there, what it's saying is that you're going to see different pricing for a stock that day. The price that gets the most volume is going to get the most weight. That means if 10 contracts are being bought at 100, but then 100,000 contracts come in at 105, then 105 is going to get more weight than the 100. All right. And you're going to see it on a line on your chart. All right. I'm going to show you guys how it looks. Now, VWAP does the same thing for stocks. It finds the average price of a stock, but it gives more importance to prices where more shares were traded. And that makes a lot of sense, guys, because price action, the reason why stocks go up or down is because of the weight at where everybody, is buying, right? If they're buying or they're putting in orders at a certain price, you're going to see the stock move in that particular direction. And it's going to give more weight to the price that everyone is buying, which is very interesting. I'm going to show you guys how to use it. It's very easy. It's just like using the 200-day moving average. So a simple way to think about it, VWAP is equal to what's the real average price people paid today. What's the real average price people paid? I'm going to make this smaller. People paid today. Now, why do traders love the VWAP? Well, it tells you who's winning. If the stock price at that time is above the VWAP, that means bulls are in control. They're winning. If stock price is below the VWAP, in control, bears are winning. All right. Just like we use the 200-day moving average or any moving average. If stock price is above the moving average, bulls are winning. If it's below the moving average, bears are winning, right? It's literally the same way that we use. And that's why I think a lot of you guys are going to love it. And I'm going to start using it more, especially since I'm going live with you guys. Number two, why people use it, because big money uses it. Hedge funds, institutions, smart money. They try to buy below the VWAP and then try to sell it above the VWAP. It acts like a magnet. Okay? Price loves to come back to the VWAP, which is the average. Just like we teach with the 200-day moving average or the 20-day or the 10-day, whichever one you're using. If it's too high, it comes down. If it's too low, it comes up. It's like a fair price line. Above it is expensive. Below it is cheap. The only difference, guys, is that moving average is an actual average of the price. The VWAP is just volume weighted average. That's the only difference. It's weighted from the price areas that people are buying. The only difference. So how do you trade it? Well, let's pull up Thinkorswim. And I'll show you guys how it looked today. And we'll pull up some of you guys' stocks. You should be able to pull up VWAP on every single solitary platform. Guys, it's that popular. It's just as popular as the MACD and the Relative Strength Index. You should be able to find that VWAP. It is not a indicator that no one knows about. It is very, 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 very popular. I sometimes I get stuck in my ways and I just don't teach certain things, and I just never taught you guys VWAP or point of control or hold on. All right, hold on. Let me pull up the MESs. All right, just bear with me. I'm pulling up Thinkorswim. I usually pull it up late, guys, because it takes so much power to run Thinkorswim. I want to make sure I do it at the very last minute so that I don't get cut off. All right, cool. So if you look at my chart, guys, that white line is the VWAP. All right. So let's say we were looking at the S&P 500, which is the MES, which is the micros. Let's not even look at futures. I don't want to confuse you guys with futures. Let's just look at the SPY, which is the spiders. If you were looking at the spiders this morning, if you noticed here, and you see how it recalculates depending on, what's open, right? This morning, this white line right here is the VWAP. This white line right here is the VWAP. That is the VWAP. So if you were trading the VWAP, price was above the VWAP, right? So if you were trading this, and let's look at it on a 5-minute chart. Even if I was to change the charts, it doesn't change the VWAP. All right. And what traders would do is, even though we were above it, some people like myself wanted to short it. And if you were able to short and we were to go down in price, some people would love to short this VWAP. Short the spiders. So what you guys are looking at is a stock chart. This is stock price that's going up. That's telling you that price is above the average. So what a lot of people did was they were trying to short, but it was going into the VWAP. Now, what's interesting is that the ESs, if I was looking at the micro ESs, the VWAP on the micros was different from the SPYs, and it was throwing a lot of people off because of that. I was talking about the VWAP looking at micros, futures, and it was above this value. It wasn't even below it. It was above it. So it's interesting because if you were trading the SPY and looking at the ESs, it would have given you a different VWAP. That's the only thing I hate about it. Okay? That the VWAP on the SPY should look like the VWAP on the micro futures. But because the micro futures is traded 23 hours a day and the spiders is only trading, from 9:30 to 4, you're going to get different values even though it's the same thing. So, in my opinion, if you were trading the VWAP, I would use it on stock. Even though it still works even though they were at different values on the charts. It still works because the SPY was above here. So if you were shorting it like this, you really can't expect it to do anything, right? You can short it to the line. This is the average. What I like for it to do is to get away from this average. If it can get away from the average and start to go down like this, you can maybe take a shot on it, but it just kept coming up and touching that same line all day long. Y'all saw that? You see this? And that's pretty much what it did all day until about 3 o'clock. It didn't do anything. The spiders didn't do anything but go sideways all day long. And candle trends, and you're getting 3 and then 6 and then 3 and then 6 and then 5 and then 3 and then 5 and then sideways. You can't really get into something that's making any money unless you're a trader that trades like this. The only people that really did well today are your traders that trade within this support and resistance area. Like if you were able to put something here and put something here, you were able to do well. But guys, I keep telling you guys, this is not how the market moves. The market spends 80% of its time. The market spends 80% of its time going up. It spends 20% of its time going down and sideways. So sideways movement is not supposed to be something that happens all day long. But if you were able to luckily buy it down here and then sell it up here 7 candles later, you made a killing. But if you tried to go short, it went against you. If you tried to go long, it went against you. So it was very hard to trade. Now, my guys that use the TTM, my people out there that use the TTM squeeze would have told you that it was squeezing all day. Well, we're not here to learn about the squeeze, but the squeeze of these red lines down there. You're not really supposed to trade when it squeezes anyway, because squeezing tells you that it's probably going to be in a range. Okay? No, the VWAP does not take the place of the yellow brick road. Remember, guys, if you're using the VWAP, in my opinion, you're only using it for intraday trading. Intraday, I'm going to write that. You use the VWAP. Now, you can use the VWAP for any way that you want to use it. Joel would use the VWAP as a intraday trading tool to tell me if we're above price, the price that everybody was buying, or are we below it? Okay. If you're shorting, I'm going to short to it. If I'm long, I want to go to it. If we get away from it, that's fine because it's bullish. On a very good trending day, if the VWAP is angled up, it's going to increase your luck, in my opinion, to make money to the upside, or if it comes down to it. So I'm going to show you guys the MESs. All right. Now, you see how when you pull up the MESs, this is what was confusing a lot of people. Look at this. We were underneath the VWAP all morning. You see how the spiders, we were like on it, above and below, but the micros, which is the S&P 500, the VWAP was above it. All right, this is one of the reasons why I kind of stopped using it back in the day. But you know what? I can just either use it and just accept it, that I can just use it consistently when I'm looking at futures, but I'm not gonna go back and forth, because y'all know when I'm trading options, I'm going back and forth looking at the futures and the options. I'm going back and forth looking at the charts. So I know me, and I know I'm gonna get angry and pissed when I see the VWAP being at different areas. Y'all know how I feel about numbers not being the same, which is why I hate Bollinger Bands. Whatever value you see a Bollinger Band at today, if you go check it 2 weeks later, that value is going to change. That means I can't go and back test it for that reason. And this is one of the reasons why I try my best. I'm just going to teach you guys how, the futures are its own thing when you're looking at the VWAP, and stocks are its own thing when you're looking at the VWAP. When I use the yellow brick road, guys, that's an investing strategy that's only used for investing. That's the yellow brick road. The yellow brick road is a 200-week moving average. This has nothing to do with trading. Nothing. Well, with intraday trading. You can still trade using the week chart, right? It can be a 6-month trade, right? The yellow brick road is the most powerful road that you guys are going to see. Now, some people can create a 300 or 400 period moving average, right? This is just one of the strongest that most people know about, right? If you want to invest in something, if you're looking for a solid area to really, really buy for something that you know that you're going to be in for 3 months or longer, the yellow brick road is your thing. If you're looking for shorter term support areas, then you're going to use, in my opinion, my humble opinion, you're going to use a 200-day moving average. So True Blue is going to be a day chart. And as you guys can see, you see how when it's up, everybody's buying it at this particular area. That has nothing to do with the VWAP. Has nothing to do with the VWAP, guys. This is intraday trading. For example, yesterday, if you were trading the VWAP, what direction was this VWAP angled? If you were intraday trading, you wanted to get in and out the same day, what direction is that pointing? In the comment section, what direction is that pointing? It's pointing down. So that doesn't mean that you can't take trades to the upside. This is how I would trade it. If I see the VWAP going down like this, my bias is going to be to the downside because that's telling you that price is coming down, right? So I really only want to take these trades here. These trades when it starts to go red, when it starts to go red here, red here, red here. I really only want to take those trades. But if you find a trade like this one and you decide you want to trade it to the upside, I'm going to ride this until we get to this. So it doesn't mean that you can't take a long. It just means that if I get there, I'm getting out, especially if I got a 10 candle trend. Does that make sense to you guys? My bias is going to be to the downside, but if you take a trade to the upside, I'm going to take it when it gets to this line. Now, this does act as a magnet. So even if we got this close, guys, I would have assumed that we were going to hit it. So to be honest, I really wouldn't have been sold on this short. I kind of like it to, when I see things go up like this and I'm using the VWAP, I like it to touch it and then reverse and then drop. It just didn't do it all day long. So sometimes, guys, we don't even touch it. And if you use it, I know what it's going to do. It's going to make you say, we're so close, I might as well take a trade. So you wouldn't have taken this short over here. Because you would have been like, we're so close to it, it's a magnet, I'm going to wait until we get to it. Then there are going to be times you take this, and then it's going to pop up to the VWAP, and you're going to be like, man, I should have just waited until it got to the VWAP. So that's why I want you guys to be careful when you use it. So today, this is what we saw. So if you were looking at the MNQs, let me show you the ridiculousness that this did, right? So we woke up, we were underneath the VWAP, all right? Today was a decent day because if we were, we were trading, this is 9:30. This is where I lost first, guys. I saw the VWAP angle down. I didn't even really expect it to drop in price. I mean, to go back up. So I was biased to the short side, even though I know that ATR and all of that, right? Just because of the situation we're in, I was biased to the downside. And I can admit that. Like, I will take this trade a gazillion times. Like, my strategy is in place, guys. I'm not, if I see this, if I see now that was 927. If I see this, if I see three candles trade all day long and twice on Tuesday. When I saw that happen, guys, I took a shot at it right here. I took a short. I did everything I was supposed to do, and I took a short right here. When it got up to this price, this is what I was expecting it to do. I was expecting it to go down in price, up in price, about halfway, and then down in price. I will take this trade every single time I see it. We got up to this price, and then we went sideways, and a lot of the times, especially if you trade the way that I trade, you'll see it go sideways for about 6 candles. And then you'll say, yo, this is not dropping. It didn't do that. It immediately went up and it went into a V. And it started to go up immediately. So then a lot of people got caught in it, like myself, and we were out of it once it hit, 50 points. So then once you were out of that particular trade, if you decided to go long, yes, if you were using a 1-minute chart or whatever, guys, look, here's the thing, all right? When you're trading, and this is what I don't want you guys to do, please don't fall into this trap, all right? Look me in the eyes when I say this. Do not fall into the trap of back testing and saying, so I don't want you guys to do this. When you guys take a loss, this is the first thing traders do. If they lose on a 3-minute chart or a 5-minute chart, the first thing a trader will do when they lose is they will look at another chart to see if they could have avoided that loss. 100% of the time, you're going to find a chart that would have avoided that loss. And this is what you guys... Then you say to yourself, I'm going to use that chart. Then you might win one more time. Now, you've been using the same chart for 3 months. You lost one time. Who cares? You're trying to trade the same way that you're trading in that time frame. I promise you guys, the chart that you were originally back testing and using was fit for you. Guys, losses happen. When they happen, just accept it. It lost. And then move on to the next trade. Trying to find something to fix that feeling of losing is not the way to go in this game. All right? Please stop doing it. Because if you go and you look at another chart, you're going to use it. It might work for 2 days. It's the same thing that happens to golfers when we're playing golf. We will play golf very, very well for months. We would have one losing round. Then all of a sudden, we'll start trying to do something different. Well, maybe I'm going to swing a little bit more to the left. And then what ends up happening, the next swing, you swing a little bit to the left, and then all of a sudden the ball does what it's supposed to do. And sometimes it only happened because you hit the ground and it corrected itself and hit the ball and made it do what it do. But in your mind, I just figured out the secret to winning again. And then what ends up happening, you go away from what you normally do, and now you're stuck in between a rock and a hard place. Stop doing it, guys. Traders are psychologically going to go through this. Whatever you brought to the party, you need to stick with it. And stick with it for a certain amount of time. And then maybe switch. Don't switch on the fly. Don't switch because you see some trader winning on one chart and you losing on another chart. I promise you, that trader's going to start losing on that chart. And then your wins are about to come. That's usually what happens. The minute you decide to go and use a different chart, your chart starts winning. Then you come back to your chart and then it starts losing and it's just back and forth. Stick to the chart that you're using. Now, I will say, when you're day trading, this is important. When you are intraday trading and day trading, and I will do this, if volatility starts to go up, I will come down. I was using a 5-minute 4 or 5 months ago. Volatility increased. I couldn't use a 5-minute chart anymore because volatility is high. It's too many moves like this. So I went down to a 3-minute. But that was part of my strategy. And when I decided to do it, I said, I'm going to stick with it until this volatility ends. I don't even go back and look at the 5-minute chart, guys, to see if it would have saved me from some losses. I don't even do it because if you do it, you're going to get stuck between a rock and a hard place. Don't do it. I'm telling you guys, the minute you look at another chart, that's it. You're donezo. Stop doing it. Stick to the chart that you're using. All right. Now, if volatility is coming in and you haven't figured out what chart you want to use to downsize, maybe you can start interviewing. But don't just do it on the fly and then say, tomorrow I'm just going to use the 1-minute chart all day long. Or I see Joel using the 3-minute. I'm going to just stop using the 5 and just use his 3. Don't do it. Don't do it, guys. Don't do it. All right. Give yourself about a week and then decide to transition. All right. Cool. And you're going to see that. You're going to see when I go live, there's going to be 10 different charts people are using. Some people long, some people short. It's going to be people saying they making a whole bunch of money. It ain't going to be nobody saying that they losing except me. I'll tell you guys when I'm losing. Ain't nobody else going to tell you when they losing. They going to tell you when they winning. They ain't going to tell you when they losing. So you don't know what's going on their computer, right? I want you guys to be careful. All right. Be extremely careful. I had to come back to let you guys know this. Whatever you brought to the party, stick with it. All right. As long as you're consistent, you're going to be good. As long as you're consistent, you got to accept the losses and you got to keep it moving. And the only way that you're able to accept the losses is if you write down your trades and you see that what you did was not part of your, part of your strategy. Then that is, we look at that and say, oh, that's an outlier. This doesn't go with my strategy. I need to cut out all of this stuff right here. What did I do? Oh, I went and I used another chart, and then I started using the VWAP the next day, and I started using, the 3-minute chart because Joel was using it, and then he got me looking at the FW Mobile, and I was just doing fine. If you were doing fine, guys, chill. You should be introducing indicators one by one, not 3, 4 at a time. Get used to your strategy. Add one. Work with it for about a week or 2. If you like it, keep it or tweak it. Then add another. Give yourself about a week or 2. All right? Slowly bring these indicators into your strategy. He wants you to change your chat and then you go crazy. Exactly. Like, guys, whatever you brought to the party, stick with it. Stick with it. You're gonna be fine. Guys, I can trade a 20-minute, I can trade a 1-hour chart, intraday trading. And if I use it every single day and trade within that hour, I promise you, I'll day trade better than most of you guys if I'm consistent with it. Consistency is the key, not the chart you're looking at. Consistency and a strategy that's sound is what's most important. Okay. All right. But yes, you're going to have to be able to block out everything you see going on the comments and what you see on my page. I even want you guys to go against what you see me doing, even if your strategy isn't the same. What I like to do when I'm trading, guys, is I like to see what they're doing just to see where I'm at. And I want you guys to try to beat me, right? Like when you come, I want you guys to use me as the focal point. If you see me about to get in something and I'm like, all right, guys, I'm about to get in and maybe you can get in at a better price, do it. And then, use your strategy, right? But use me as the foundation. So when I day trade in the morning, I use a trader just to kind of hear what they're doing. I never take the same trades they take because I have my own strategy. But what I do like is when they decide to take a trade and I'm deciding to take a trade at the same time, more than likely, if I see 2 or 3 different people with 3 different strategies and we're all deciding to get in at the same time in the right direction, a lot of the times it's the right move. All right. And I do feel happy about that when I'm setting up and then they're setting up. But I don't take other traders' trades just because they're saying they're about to do it. I watch, I see what they're doing, I see where I would enter, and then I would try to beat them at what they're doing. And that's going to help you guys also. All right. And then, having other people there that's coaching and showing you discipline also helps. We're talking a lot about trading, guys, because I'm setting you guys up for next month. Next month, how I do a webinar week every week. Next month is going to be about intraday trading. All right. I don't know what I'm going to do the month after that. Maybe I'll start back to what is a stop for my beginners? Because we moved up, right? We did a 30-day challenge. Then we did beginners for the first week. Then we did options. Then we did futures. Well, now we get into, intraday trading. And then we start all the way back to the beginning for you beginners that maybe missed, the last 100 days. So next month, the very first week, I'm teaching you guys everything that we're already talking about. Each day will be a certain subject until you guys can get the strategies down for free for intraday trading. All right. Cool. So that's the VWAP. So if you guys see the VWAP right here, you see how on the NASDAQ, look at where we went to, guys. We went to the VWAP. Look at that. All it. But you didn't really have long to make money. You were already there. And then if you wanted to short, you had to short at the VWAP and then short. Like you had to really take a chance and reverse there. Now you could have drawn a trend line right here. And then the very first candle that broke that trend, you could have given yourself a chance, guys. But even these moves was only 482 to 420. It was only 50-point moves. You were really only going for singles today. 50 points, that's it. $100 a day, you're done. Those and guys, the NASDAQ moves 500 points a day on average. That ATR for the NASDAQ is 500 points. So if the ATR is 500 points, and I know I can make a third of that, the market is not letting you get more than 50 points before it reverses on you. That's why it's been so tough, because it's like, yo, how am I even gonna get 100 or 150 points when all it's doing is this? This is all it's doing. 50 points at the most, so you're really scalping, and we really don't want to, I really don't want to teach you guys scalping, because you really have to be really good to scalp. You got to be fast. You got to understand orders. You got to we're using the active trader. If you don't know how to use auto send, you got to be able to be fast on the trigger, get in, set your target at 50 points. Because guys, this move right here, if you were able to catch this move to the upside and get your little 50 points, That happened within 3 minutes. You had to be that fast. 3 minutes. Get in, set your target, get out, and go on to the next one. And then you had to catch it at the right areas. So, it's a dream for a lot of us. And then you got a nice little move right here. You finally got a move after getting chopped up for an hour and a half. You got a nice little move here. But then it didn't come up to the 10-day moving average like I wanted it to. So I couldn't catch this short. And even if I caught that short, it went from about 24,500. Okay, that was about a 100-point move. This is probably the best move of the day right there. Okay? And everything else was just choppy jalopy. Look at that. It was just going up and down, and it was just going to the point of... Now, if you were just trading off the VWAP, you would have been straight. Even this move right here didn't really give you 10 candles. It was 1, 2, 3, 4, 5, 6. When it's giving you 4, 5, 6 candles, and guys, I'm using a 3-minute chart. That means trends were only lasting 15 to 20 minutes. That's it. You had a 20-minute trend, and that was it. You had to be fast. And if you're a momentum trader like myself and you're not trading off of, reversal areas, then it was hard. And here's what's crazy. The traders that actually trade this way, they can't trade this way on a normal day because this wasn't a normal day. You had to be fast. You had to be quick. You had to know those different areas, and you had to know today was a day that it was going to do that. Because I promise y'all tomorrow, the same traders that are trading these areas like this, because that's what the market will do. Whoever got rewarded today, the market's going to be different tomorrow. But if you give up on your strategy today because it wasn't trending, and then you switch it out because somebody said, yeah, you're supposed to just get your money every 15 to 20 minutes. I promise y'all tomorrow there'll be a 2-hour trend. And everybody that's buying these little 15, 20-minute moves, they're going to try to reverse at an area, and it's going to rip their heads off. I've seen it happen. I've seen everybody do it, which is why I've been telling you guys for years, if you look at the market, if you find some of the best traders that are out there, we are all momentum traders. Anybody trying to catch reversals day trading, the worst traders on the planet. But today was their day. It's out of 2 or 3 weeks. And if you were able to capitalize, I hope you made all the money you possibly could make. Because I promise you, if you try this tomorrow, it ain't going to work. It ain't going to work. I've been there, done that. I'm not even trying to be negative, guys. I'm just letting y'all know how it is. All right, so be very careful. These 5 to 6, these 15-minute trends up, 15-minute trends down, 15-minute trends up, 15-minute trends down. That's not normal. That's not normal at all. And it's not that it's just going sideways, guys. It's ripping 50 points, 50 points, 50 points, 50 points, 50 points. And if you don't get in at the right area and know when to get out, unless you're super duper fast. Yes, momentum it's truly scalping. And this market, unless you have a system that allows you to scalp, if you're a scalper, great. But if you're just a reverser, like if you're just like, I think this is high, so I'm going to short, I think this is low, or if you're drawing horizontal support and resistance lines to day trade, you guys are the worst traders on the planet. I will never trade with you guys because the market spends most of its time going at a 45-degree angle this way or a 45-degree angle that way. We never go sideways. Ever. All right? Remember, the NASDAQ moves, guys, the NASDAQ moves 500 points a day. We stayed within a range of like 200 points No, we stayed in a range of about 150 points the whole day. I ain't seen that in literally in about 6 months. Now, I will say this type of trading is perfect for low volume. But if you bring in any type of volume, you're going to get some moat. Now, I lost today. I had a double lose day. I lost in my investment account. I lost trading. And I can admit that, right? But I'm not down for the week trading. I'm still up for the week. All right? Just a bad day that happened, right? Just a bad day. Just like gold. Gold had one of its worst days since 1983. Every now and then you get caught up in like the worst day ever. Now, was this my worst day ever trading? Hell no. Not even close. So I want you guys to be extremely careful and be honest. Be honest with yourself and be honest with the people that are in the comment section, right? A lot of the times you guys don't be honest because of insecurities, right? You want to be secure about what you're doing and how you're doing it. You want everybody to make sure that you're smart and you're intelligent and you know what you're doing. And it's not the real picture. And I'm not saying that you should harp on the negativity of what you do. I'm just saying, tell the whole picture. Tell if you're down, you're down. If you're up, you're up. We want to help everybody that's here. We want to help you with what you're struggling with. That's why when I pull up these indicators, let's see what ChatGPT says, because I'm no longer believing humans anymore. I've lost faith in humans, and I've lost faith in human traders. I've lost all my faith in human traders. I just have, which is why I'm always ranting. I'm like, I'm so quick to pull up chat, even to double check what I'm saying. All right. And I want you guys to start doing the same thing. All right. Yeah, we got to take lessons from this game, man. Like this is real. We want everyone in here to win. All right. We want.
Now connected to MacBook Pro 2.
Now that was weird. Hold on. All right. So, what's some of you guys' what kind of questions do you have? What kind of stocks you guys want me to look at? Let's look at some stocks real quick because I am going live at 8 o'clock. Doesn't necessarily mean I'm taking a trade. It just means that from 8 to 8:30, which was interesting. Let's look at yesterday's trade. All right, let's look at yesterday. Oh, you know what? My chart, I switched out my chart so you guys can't even see what I see. And that sucks. Dang. I forgot I made this smaller so that you guys can see it. Dang, that's my bad. Y'all probably told me in the comment section too. My bad. Y'all saw the end of the chart. Y'all could at least see that white line. All right, so let's look and see what happened last night. So last night we were trading. Now, guys, at 8 o'clock, the reason why I like the 8 o'clock trading session is the market opens back up at 6 o'clock. So the market just opened. So if you are looking at the market right now, you'll see that it's open. What time is it? 7 o'clock. It's open right now. So it's moving. The NASDAQ is moving. But as you can see, it's really not doing anything. It's going sideways. Look, we're at the VWAP, right? So it ain't doing nothing but riding this line, right? It's not breaking away from it. It's not breaking away from it to the downside or to the upside. It's just going down for about 3 candles up like molasses, right? So yesterday, same time, couple of trades started to pop off. So yesterday, we didn't have the VWAP on, but it probably would have saved us. I took a short with you guys right around here. So I was able to get in somewhere. I forgot what price I told you. guys I got into, but I saw these 3 candles go off. You see my little arrow go off. Now I didn't want to get in way down here. I knew it was going to fall for about 10 candles. 1 candle, 2 candles. So if you guys don't know about my 10 candle system of trading, you better learn it. This was the first candle. 1 candle, 2 candles, 3, 4, 5, 6, 7, 8, 9. Look at that, guys. 10 candles. I was looking for a 10 candle trend. So I like to be in within that 3rd candle. I got in on this 4th candle around 24,619. I got in right here at 24,619. I'm looking at the micro NASDAQ. So for you guys that don't know what we're looking at the MNQs. All right. Now, I got in at 24,619. I think I got in at 24,620. It rose to 24,634. So that's 14 points. For every dollar move, I make or lose $2. So if it goes against me 14 points, I was down $28 at the most. Then it started going my way. Now, here's what's interesting. I took that trade right when we were closing, right when I was getting off the air. So a lot of people were laughing. They were like, Joel, you just gonna leave right after getting everybody in a trade. And I was like, yes, because I'm trying to stay married. And I'm going to get off at 8:30 so I can go have quality time with the wife. So at 8:27, the trade went off, and I was out of here by 8:30 to leave you to do your own thing. So it went from 24,620 all the way to 24,634, and it dropped all the way down to 24,586. For you guys in the chat, let's do some math for the people that are not here. If this dropped to 24,586, how much was I up in price? If I took a short, I'm going to give you guys a couple of numbers. If I took a short from 24,619 and it dropped to 24,586, and I make for every dollar move, I make $2 for every dollar move. How much was I up? Now, I broke even, but how much was I up at the time? If I bought 1 contract of the MNQs, do the math in the comment section for me. Okay, Kaizo, $66. Where did I get $66 from? Well, points. We moved 33 points, so 24,619 minus 24,586 gave me 33. Now, y'all can do math. It's just 24,619 from 24,586. We were betting on this going down, or I was betting because there was a couple of you guys that were going long. I was betting on this going down. It went 33 points. At one point, I was up $66. Now, how many points is Joel trying to make? Y'all know what I'm looking for. How many points was I looking for? Before I even think about taking profit, Sherlock got it right. 50 points. I need at least 50 points because 50 points times 2 is $100. Well, it didn't quite get there. It went more than, yes it did. I'm sorry, I'm trying to get 100 points. It went 66 points. Actually, yeah, I'm trying to get 100 points. Yeah, I'm getting confused which one I'm looking at. I'm looking to get 100 points. All right, I want 100 points. But it looks like I need to get 50 points in the aftermarkets. Guys, I don't normally do 8 o'clocks. I'm learning 8 o'clock just like you guys are. I'm learning 8 o'clock with you. I just decided I was going to do it because there's no way I'm going to go live with you jokers early in the morning. It's too many questions are going to come at me, and I love you guys, but you're going to be a distraction for me. I will be a distraction for you guys. I don't mind a distraction at 8 o'clock because the moves are not as violent. So what I should have done, guys, was instead of looking for what I normally would try to get in a normal trading market, I should have cut it in half. In fact, it looks like 25 might be what I'm looking for. So if I'm going to trade looking for 25 points, well, it went against me it went against me 14 points. So I got to figure out a risk to reward that works. I kind of like risking 25 points to make 50 points. So that's probably what I'm going to use for now on after hours. I'm going to risk 25 points, which is $50 a contract, to make $100 or more per contract. Now, in the comment section, how much did I need in my account margin-wise to even take this trade? In order to give myself a chance on Thinkorswim to make $2 per dollar move, how much money did I need in my account? On average, it doesn't have to be exact. Arwen got it right. I have the capital to do it, guys, so I was using $4,500. Okay? I was using $4,500 to be able to buy one contract. Now, please, I don't want you to get discouraged by the margin. There's some brokerages that allow less margin. Margins are going to change depending on what platform you go to. I use Thinkorswim. I've been on Thinkorswim for so long, guys, that I was with them when they were called InvestTools. This is how you know a true trader. If you ain't got one of these right here, if you ain't got one of these, y'all are like, what the heck is this? Not only do I have one, I got about 5. This is how long I've been with Thinkorswim, when they were giving away monkeys just to open up an account. All right? No, I don't prefer one over the other. In fact, I like the MYM. In fact, I love the MYM. So there are different margins that's out there. So let's go through them, right? If you wanted to trade the NASDAQ, guys, you need. I'm gonna check it for you guys. If you want to trade the NASDAQ, you need. 45. Wait, let me check. You need. Oh. I have one account where the margin is hella low. $4,500. All right. So it's $4,500 if I want to trade it. On one of my accounts, it's $3,800 because I got a lot of cash in it. All right. $800 for some of you guys. It's $4,500 for this particular account that I have. It's a newer account, so I don't get the same margin that I have on another one. But it didn't matter. I have enough capital in it to be able to do it. So you can, for every contract you buy for the NASDAQ, for the MNQs, you need $4,500. Now, if you wanted to trade the S&P 500, which is the MESs. If you wanted to trade the MESs on Thinkorswim, which is the micros, guys, you're going to need $2,600. You don't need as much as the NASDAQ. You need $2,600. Or if you're a baller like that, if you can show Thinkorswim that you can take a whole bunch of trades, maybe they'll bring your margin down. They can do that. I haven't even argued with them about it because I don't really need it like that. All right. So if you trade the ESs, you're going to need about $2,600. If you want to trade the YM, which is the Dow, if you want to trade the Dow Jones Industrial Average, guys, the Dow, which is, I like it also, all you need is $1,700. So yes, you need $4,500 for the NASDAQ. Just about all of your major traders that you see that are live are all going to be trading the MNQs. It's almost like it's a fraternity for traders. Because I don't know, maybe because it's the largest one out there, you kind of separate yourself from everyone else because everyone can't really buy multiple contracts at $4,500 a piece. I don't know what it is, but everyone uses the MNQs. I guess it lets you know who's serious and who's not. Okay. So the Dow is 1,700, but I'm gonna tell you guys something. The Dow is the easiest. It's always been the easiest one to trade, in my opinion. For you guys that trade the Dow, but see, I think I have some form of OCD. So it's interesting to me because every dollar move, guys, is 50 cents. So every time this moves a dollar, like for example, way down here, the Dow was $46,000. And we went from 46,000 to 46,550. Now, me knowing the kind of person that I am, I don't like calculating the points and then dividing it by 2. I like simplicity. So if I know it's going to go from 46,000 to 46,550, I'll just buy 2 contracts. So now when I buy 2 contracts, every dollar move is $1. That makes so much more sense to me. And people were like, Joel, you'll pay an extra $3 or $6 a contract just so that it can be every dollar move. And I'm like, yeah, like, I don't mind that. Like, I just like the fact that I can calculate it really, really fast. So that was a $550 move, but I needed $3,500 to be able to do that. All right, if you wanted to, now this was the Dow. So we looked at the Dow, we looked at the NASDAQ. This is the Dow. We haven't looked at the Russell yet. So if you wanted to look at the Russell, guys, the Russell is going to be the M2Ks. Now, I like the Russell because the Russell moves like the ESs. So every dollar move, you're going to make like $5. Okay? Every dollar move, you're going to make like $5. Just like the ESs. But what people love about the Russell is all you need is $1,300 per contract. Ooh. Why trade one contract of the MNQs when you can buy multiple contracts of the Russell? So the Russell is $1,300. So if like today, and you were trying to calculate or get an idea of how much it can actually move, the Russell, every dollar move, guys, is going to be $5. It's literally the same thing as the ES. So the ES and the Russell, $1 move, $5. That means if the Russell goes from 24.89, let's do some math. Let's say you caught the Russell at the end of the day, and it went from 24.90 all the way to 25.40. How much money did you make? It went from 24.90 to 25.50. Do the math in the comment section. This is the Russell 2000, which I know this is going to sound crazy. Why did just the other day I figure it out? Because I was like, why is it called M2K? Like, that don't make no sense. Because it's the micro Russell 2000, Joel. Like, and I looked at myself like, duh, that's actually genius. The micro Russell 2000. So it's called the M2Ks. So if I think that number is wrong. If we went from 24.90 to 25.50, that's a 60-point move. No, you're right. That's 300 points. I'm wrong. Joel Harrison is wrong. Yep, that's a $300 move, guys, and all you needed in your account was $1,300. That's a 25. That's like option type moves. That's why I love the futures, guys. The futures is in between stocks and options. Options are gonna always give you the most bang for your buck. But y'all shouldn't be day trading options. Y'all ain't that good. And y'all don't have enough capital to do it. I know you guys are trying to get rich because you can use a little bit of money and make a whole bunch of money, but y'all honestly just need to get your weight up. Get your weight up and trade the futures market. Unless you want to trade options, swing trading, and in my opinion, you guys need to go 30 days or longer. 30 days or longer in the options market. And don't try to budget the trade. If your budget is only $150 or $200, you need to go find a whole bunch of stocks that have low stock prices like Ford so that you can be in it for 30 days. Quit trying to trade MicroStrategy out of the money because you're trying to budget a $300 trade in the next 30 days. That's where you guys are going wrong. Or trying to buy, I want to buy Tesla with everybody else, Joel. Well, either buy debit spreads or you need to choose a different company until you can get your weight up. There's a reason why a lot of these margins are out there, guys, to protect you from you. Protect you from yourself. All right? I don't like these $500 futures contracts. I really hope that those companies would just go away. Where y'all are getting, you're paying $500, you'll fund an account with $2,000, trading 4 contracts, and all your money's gone in like the first day. Because you're not used to it moving that much or thinking that it can actually do it. All right, yeah, 45 days are optimal. Look, guys, the longer you guys go out in your trades, you're going to have a higher percentage. You're going to have a higher percentage. You say, how are we going to get our weight up? Well, you need to maybe go live. Go live like I'm doing. Get a couple of people to support your lives. Tell everybody what you're doing. Do a GoFundMe. There are other micros, guys, that are cheap. Did you guys know that you can trade? You guys know you can trade crypto futures. I don't support it, but the futures in crypto are also pretty. Like I think it's like $250, $300 for like Solana futures. But once I did the calculations, I was like, this ain't even worth trading. But I know some people that do it. They love trading Ethereum futures, the METs. They love trading. Guys, did you know you can trade Ethereum? This is Ethereum. Y'all know what it's $115 per contract. $115 per contract to trade Ethereum. So you can have as little as $100 and something and just to get your feet wet to see what you're doing. You also have micro Bitcoin. Now micro Bitcoin is expensive. I don't think any of us can afford this. Oh wait. MBT? Oh, my bad. It's only $2,800. I had no idea. So you can trade micro. When did the micro Bitcoin futures become this low in price, guys? Is this right? When did this happen? I might need to look into this. Guys, it's $2,800 to trade Bitcoin. So you can trade Bitcoin. You see the 69,000 price. Instead of trying to trade it with 69,000, you can go trade it in the futures market with 2,800. Okay? And you can trade micro Bitcoin. Look, even Bitcoin has a VWAP, guys. Look at it. It's just sitting there hitting the VWAP. That white line is the VWAP. Yeah, go fund me. You guys are hilarious. What are some other questions? Joe, can you teach it to us if we can? You said, Joe, you can still teach it to us so if we do trade options, we don't get hurt. Oh, yeah, of course. Of course. I'm gonna try to teach you guys how to do the more intelligent way to move towards the market. But look, you guys are grown. You're gonna do what you want to do. That's the beauty of being the CEOs of our companies. Y'all aren't. Y'all are not that good. Stop trying to do it. Was there any other micros y'all wanted me to check the? Is there any other micros you guys wanted me to check the margin for? Yeah, guys, you can get your weight up real quick trading futures. If you opened up an account and you traded the Russell 2000 and you had $1,300 and you were just looking for $50 moves a day with $1,300, guys, you can get your weight up fast. $50 a day. Let's say you make 100 a week. You take a couple of losses, you take a couple of wins. Every week you profit $100. By the third month, you can now buy 2 contracts, and now you can do it over again. Now you're making $100 a day, or I'm sorry, you're making what was it? It was $100 a week, $400 a month. So then you start doubling up. You double up the contracts. Now you're making $800 a month. You get up to 4 contracts. Now you're making $1,600 a month. You know, you just slowly start building up your account. And in the same time, guys, you don't have to just build up your accounts with the money that you're making in your futures account. You could be taking 10 or 20% of your TikTok money and putting that into your futures account so that futures margin can grow so that you can buy more and more contracts. You can, there's so many different ways that you can do it. When you get a check every week from your normal job, you take 10% of that and you start building your account. In my opinion, guys, I don't care how much money I have, guys. I don't even want an account more than 100 grand for trading. Now, investing is totally different. I want a $10 million account for investing. For trading, you don't need more than 100 grand. Because even with 100 grand, even if it was just pure stock that you were buying, if you're with a company like TD Ameritrade, they're going to give you a 1 to 4 margin. So even with 100 grand a day within my trading hours, with 100 grand, I don't even know if you guys know this, they'll give me a 1 to 4 margin. Once you have over $25,000 or $30,000, they're going to give you a 1 to 4. So your margin is going to go down 75%. So they'll give you 1 to 4 margin on futures once you have a certain amount in that particular account as well. You don't need more than $100,000 to trade, guys. You just don't. Anybody that has more than 100 grand, you're tripping. 100 grand should be the maximum amount. To be honest, your goal right now should be, if you don't have 1,000 is the first goal, 1,000 to 1,500, so that you can at least trade maybe some options, maybe some futures. Then the next step is 10 grand. You got a $10,000 account. You can still buy 2 contracts of the NASDAQ. You can buy multiple contracts of the MESs. You can buy multiple contracts of the Russell, gold, oil. You can trade every single micro futures that's out there, and you can buy up to 2 contracts. If you have a $10,000 account, you'll be able to trade everything. No reason why you should need more than that. And then if you want to up your game and you want to do it as a career, then you can start pushing to about that 100. But I don't want an account higher than 100. I don't need it. Because if I'm getting in and out the market the same day, I'll use the margin that Thinkorswim's going to give me. I want to keep my capital somewhere else and use someone, and if I'm offered that and I'm a professional, keyword being professional, guys, professional, then you want to go ahead and do that. So your first goal should be that $1,000 account, $1,000 to $1,500. Once you get up to about $1,500 and you can handle it and not blow it up, then you can start pushing the $5,000 and then $10,000. Then I want you guys to sit at $10,000 for a minute. Then the goal is to get a $30,000 account. Why? You want to have 25 to 30 guys so that you can play in stocks. To be honest, buying stock is actually, day trading stock, in my opinion, is the safest way to go as a day trader, because shares are so many different prices. It's going to teach you guys how to buy multiple shares. You guys aren't buying multiple contracts. Most of you guys are buying one every time you trade. One every time. And when you buy one every time, you're not teaching yourself how to add another contract when it gets higher, or dollar cost average into that futures. If you're a multiple contract futures buyer, a lot of you guys are still buying it all at one time instead of buying one, waiting for it to go down a little bit, and then dollar cost averaging or scaling in as it's, going your particular way. What do you mean greed by you mean 100K? Account? Well, you can trade. You can have a nice. You can have a nice options account with $100 in it, guys. You can have $100 options account, and that's fine. Like, y'all know, that's my Robinhood account. I only put $250 in it so that I can have DOD and I can trade anything I want to and not care if I blow through it. So yeah, I throw 250 on my Robin just so that I can, if I want to buy something, I just have to do it. Like, I'm like, ooh, I don't want to say ooh. Let's just say, ooh, I see missiles going off and the market's dropping in price, and I just want to take advantage of it, and it's 3:00 in the morning or whatever, and I want to put in an order to short the market to see what that 250 will do. And you don't care if you're going to lose it. Yeah, you can have a small account that you use just for, your DOD. Now, if 250 is a lot to you guys and you're starting there, that's fine. Even with that $250 account, you guys shouldn't be using $250 per option. Even with that $250, you guys should be using $50 at the most per options contract, no more than 20% of that portfolio, unless you're a professional or you know that you have the ability to re-up. But yeah, everyone should have goals. I don't think anyone here, including myself, should have an account, a day trading account with more than 100,000 in it. Once you reach 100,000 and you are a professional trader, you can trade any and everything that's out there. And you're going to be fine, especially if you're on a platform like Thinkorswim, because they're going to lower the margin for you so that you can buy those big, the big ES or the big NASDAQ or the big, Dow, if you are a professional trader. And you'll have the capital to be able to day trade stock. You'll be able to do whatever you want to do. But before you get there, you got to start somewhere. If you're starting somewhere, $100 is your goal. If you haven't done it, let's open up a $100 options account and start investing in yourself with the other 100. Start pouring $10, $15 into some stocks that you guys like on not an every week basis, but every time you receive a check. And then start out with a $100 options account. Even with that $100 options account, you're going to look for $25 and $30 options. That's it. Until you get good enough where you can work with a $1,000 account. More than likely, if you do get good, you can flip that 100 to 1,000. You guys got to have a strategy. You got to know what you're doing. We find $25 and $50 options plays every day in the S&P and NASDAQ, especially if you're trading one-day options. So anyone that's using $300 or $400 when you could be using 30 or 40 bucks and you're just now learning, scale down. Then once you reach 1,000, once you reach 100, then you can say, all right, my next level is 1,000. If you want to be a professional trader, you probably need about 10 grand, guys. 5,000 to 10,000 is what most professional traders will start with. And you're not going to be able to day trade stock, but you'll be able to get in and out of futures until you're able to build that account up to 20. I always say 30. Give yourself a $5,000 cushion. And then you're going to, in the meantime, you're taking stock plays, right? So, at some point, guys, you're supposed to set yourself up. And here's the thing. You shouldn't be doing it all in one account. You shouldn't be doing stock trading, futures trading, options trading, in my opinion, in one account. Let there be an options account that you do options in. Let there be a futures account that you do futures in. Let there be an investing account that you're investing in. All right. Preferably a self-directed IRA that you're doing your investing in, so as that money starts to grow, you can self-direct it by buying and selling things, but you're not taking those funds out. They're there for when you retire. Yes, you can do futures on Robinhood, JJ Jones. I don't personally do it, so I'm not here to tell you how it's done. I would say if you're going to do futures on Robinhood, I would still use something like Thinkorswim for your entries, and so that you can see what's happening. And then you can use Robinhood where you take the actual trades on. There's $40 options offered every single day in the S&P and the NASDAQ and the Dow. You just got to be an intraday trader. They're one-day options. But yeah, there's options as low as $10 if you find them on the right places. But yeah, they're $10 options all day, every day. All day, every day, there's $10 options. I think my wife just took a Ford option that was 3 weeks out that was only $30. And it was like at the money or close to at the money. It was $30 for the put. And she did it on the hood. Not to put her business out there that she was shorting Ford. But, I think that option was $30. Let's see. I'm pulling Ford up right now. So if I was looking at Ford, I was looking at its products. Yeah, guys, these options, if we were to go out to April the 10th, there are options, guys, that are going for $23, $26 in April on Ford, puts and calls. April the 10th, at the money, $30. Unusual options activity, in fact, at the, what strike is this? $11 strike. Let me show you guys some of this unusual options activity. Look at this. Look at these options. Please don't go out there and buy these because I'm showing this to you. Yeah, that is a thing. That's the only thing where price matters. I know I always tell you guys, don't look at price. Price don't matter. It's an illusion. Well, it matters when you're buying options. The cheaper the stock, the cheaper the options. So if you're having a hard time finding cheap options, guys, it's because the stocks you're looking at, the price of them is too high. Like they're triple digit stocks. Look for single digit stocks in maybe double digit, and you can keep that price in the 20-30 range. So I want you guys to look at Ford real quick. Thank you for the hat. Who just sent me that? Thank you for the hat, Shaq Bully. So I want you guys to look for this unusual options activity before we go live in 7 minutes. So if you look If you look down this way, if you look at the volume, tell me, what is the largest? Oh, that's the open interest I saw. Anyway, what's the largest number you guys see? I usually want to see 1,000 or more. I looked at it quickly thinking it was the volume, but it's actually open interest. What's the largest number that you guys see? Well, that's open interest. I don't want you guys to look to the right side. I want you guys to see this here. 217. Yep, 217 is the highest volume. Now, that's not unusual. It's unusual because, yes, it's 3 times more than all the other ones. So that makes it unusual. But what makes it an unusual, what would Joel do? View of unusual options activity, it has to have more than 1,000. I don't really like buying any strikes unless there's 1,000 contracts or more, because I want to make sure that I can get out of that option anytime that I want to during trading hours. I need it to be enough liquidity in order for me to get out. I need the liquidity to be there for me to be able to get out. All right, I'm going to go live in 5 minutes, guys. So before I go live, I want to give a shout out to the top 10, G7 the one and only, Millionaire Challenge, which is myself, Arwin K. Yorkie, TJ, you got Dr. Harrison. We had Mrs. Matthew that was in here earlier, guys. I'm telling you guys, if you don't know who Mrs. Matthew is, she's probably the number one live host over on, across the street, the one that starts with E. She was in the room earlier today. That's actually my mentor. I'm signed underneath her with the GQ. I'm a GQ host, and I am signed under her. So that is my mentor. She decided to come over today and see what I'm doing. But we have Krista Agami coming in at number 6, Safari Don number 7, Kale coming in at number 8, which it just switched up. Sean Sorrell at number 8. 9 is Master Zonitis. Raymond Gaines coming in at 10, and we got Sherlock coming in at honorable mention number 11. A lot of people did leave earlier because, a lot of the times when we're talking about trading, guys, the majority of people that come to my lives are investors. I usually lose a lot of viewership once we start talking about trading, which is fine. We're going to talk about trading probably up until the beginning of April, and then we're going to go back to investing and swing trading again. But the first week of April, I am going to do, webinar week, and we're going to focus on intraday trading the way that we're trading, like right now. So I'm going to put on a song. I'm going to play what we were playing earlier. Playing some Jay, but you guys